This conference will now be recorded.
Good evening, ladies and gentlemen. This is Cool to Say Trading Frank. It's a very exhausting day, exhausting week, as we all know. It's 8:36 p.m. on October 2nd, 2019, start of the fourth quarter here in the U.S. financial markets. A monumental quarter to start, and it's starting off with a bang on the downside. So, do we look at it as an opportunity, or do we look at it as a complete fear-mongering failure? Well, I'd like to look at it as an opportunity. That's just been me. It's made me money over the years, but that's just the way it goes. Whatever you guys want to do, you do. Full disclosure, this is purely for financial education, not for any solicitation or advice. This session will be recorded, uploaded to the Google YouTube channel for further viewing by all members, free trial subscribers, and anyone out there with the internet connection. So that's basically it. End of the webinar. No, I'm just kidding. So bottom line is that we are going through another one of those gut-wrenching pullbacks, which just seems never ending. Now, from our past experiences, and we have all been doing this for a while, I've been doing it longer than most of you, but most of you have very short memories. Just within the past couple of months, we have had many of these massive flash crash pullbacks, which have resulted in powerful reflex rallies, not to take out the highs, anything like that, but powerful reflex rallies in the range of 200 to 400 to 500 points. Keep in mind that we are down more than 800 points in 48 hours. Now, if you didn't think that's normal, and that's going to be what the case is going to be forever, well, then you are definitively not a trader, or definitively not thinking with your head right. Because the fact is that when you get an 800 or almost a 3.5% or whatever the percentage is drop on the overall indices, Dow Jones Industrial Average, NASDAQ, Russell 2000, I don't have the exact numbers in my head, you gotta expect. It just happens almost 100% of the time. The only time that I'll say it happens 100% of the time within a 24 to 48 hour period that you get a pretty severe bounce. Unless the whole global system back in 2008, 2009, or early 2009 crumbled. Well, as you all know, that's not the case whatsoever. We had, just to get straight to the point, and I try to keep this as short as possible. I keep on saying that, but then I keep on rambling on with some good stuff. But the bottom line is that we're doing fine till yesterday morning. And then came the ISM numbers, which is Institution of Supply Management, manufacturing number, which basically looked at the actual manufacturing component of our economy, and that was like not good. I'm not going to say it's fugly, but it wasn't good. And the bottom line is that that caused the market to just go plunk. All right. Now, was it necessary? Well, we're not here the ones trying to make the rules. It just, the gurus will tell you that it's the first sign that the U.S. economy is going to buckle. And the U.S. economy is the world's largest, what is our GDP? Like 19 trillion or something crazy like that, somewhere around there, that it's starting to buckle under the pressures of this U.S.-China trade war. That's pretty much the reason, to be honest with you. Because when global economies start to falter, whether it's Europe, whether it's China, whether it's anywhere else, you're going to feel the effects. Because 70 to 80% of our income, what we call GDP or gross domestic product, comes from selling overseas. U.S. is all about business. It's not about politics and all kinds of other garbage. Whether you're a hardcore Republican, whether you're a hardcore Democrat, whether you're a leftist, whether you're a liberal, those are just terms people use. It's about business. So if business is not making money, the U.S. economy is going to falter. Simple as that. That's why I'm all about business. That's it. You can sing and dance and do whatever you want, but the bottom line is if U.S. business is not making money, then the U.S. economy is going to start to slow down. That's what showed up for the second time in a way that the markets didn't like, And there were other reasons too. All the political stuff going on, the garbage with impeachment and everything, that's a secondary factor. But the ISM number was troubling. And there's no question about it. Because that shows that we might go into recession faster than what we think. Don't forget, for 2 years, the market has done nothing. It's in the same place it was in January 2018. I'll show you. So for 2 years, despite all the great things and the business friendly stuff that President Trump has done, the market has done nothing. Nothing. For almost a year and change. Think about it for a minute. This US-China trade war, which I believe there's going to be some sort of a resolution as early as next week, some sort of framework, is going to spark a monumental rally. If it doesn't, see you later. I explained all that stuff in the last video. I explained all that stuff very clearly. What the technical levels would be, where we would fall, and this and that. Things are getting messy. There's no question about it. In between, yeah, we're making some good quick scalp money, blah, blah, blah. But the overall technical charts are on a full-scale breakdown right now. Deeply, deeply oversold. But deeply oversold doesn't mean everything turns within like a minute. But I do believe we're going to have a reflex rally within the next 24 to 48 hours. We have a monumental number coming tomorrow. Ladies and gentlemen, stay informed, stay alert. And that is the ISM, not the actual manufacturing hard numbers, the ISM services number. Now, one thing that people tend to forget because they have no idea what the U.S. economy does, to be honest with you, is that our manufacturing component is very low. I believe it's like maybe 10 or 20% of economy is a manufacturing-based economy. Most of it is services, financial services, health services, all kinds of digital services, software services, and everything. We don't manufacture that much. That's just the way globalization works. Unless you want to pay $10,000 for your fridge and not $2,000. That's just the way you go. You want to pay, $15 for your Hanes underwear instead of paying $50 for it, then just tell the rest of the world where labor is cheap that no, we're all going to make it in the U.S. Okay, great. We are no longer a manufacturing nation. And it ain't going to be like that. We are a high-level manufacturing nation. We manufacture high-tech stuff, the greatest weapon systems, the greatest healthcare systems, actual hardware, the greatest, and you guys need to know this. That's why I'm just saying it, okay? Not to make you guys sound smart. I'm sure all of you are pretty smart. But greatest computers, greatest software, things like hardcore high-tech stuff. The rest of the basic stuff is manufactured overseas. That's just the way it goes. Whether it's China, whether it's Vietnam, whether it's Bangladesh, whether it's Cambodia, Malaysia, all those places, that's where it's manufactured. Where labor is cheap. Well, Malaysian labor isn't cheap. But even Chinese labor isn't that cheap anymore. It's Vietnam, Cambodia, Laos. Next time you buy a fleece jacket, why don't you flip over the thing and see where it's made? 9 out of 10 times, if it's a textile product, you're going to say it's made in Bangladesh. That's why more billionaires are created there, because those guys are innovative. It's called the law of labor diffusion. Where things are cheap, you make it there. And that benefits all U.S. consumers because they pay cheaper things. They keep more money in their pocket. So, saying all that, the bottom line is that if we don't get some sort of framework for the deal, the market is going to collapse. In between, what are the tricks? The tricks are you lower your long positions, you do some scalps where you get these intraday quick pullbacks, not on everything, on selective stuff. You got to watch the monitors as closely as you can. And you got to be a trader. This market is not for sleepy investors. It's not for sleepy traders. I can't change that. I'm sorry. All right? So saying all that, there'll always be unique situations. There will always be specialized stocks that will just go the other way. There were a bunch of stocks that went the other way. I showcased it. So you got to be more hands-on during these extremely volatile periods. Or a simple thing, there's nothing wrong with, just stay away from the market. Now, yeah, you'll miss that huge reflex bounce that is always happens, but you can maybe jump on the bandwagon. Because when you get this oversold, and you don't need to be a rocket scientist to figure it out, it's happened 100% of the time. 100% of the time. That's not really oversold. This is what happened, oversold. Okay? So yeah, we might slip and slide a little bit, but you get a vicious bounce. Happened in June, happened in March. I'm just showing it. You don't need to be a rocket scientist. You gotta buy. You gotta buy some time, a week, maybe 2 weeks, and you just gotta sit there, walk away from the computer. You're gonna make money. That's a given. Now, unless the whole system is broken, that's a different story. It's not. Like we used to say back on Wall Street, like a term that I coined was every crisis is the same for different reasons. It's the same thing with your life. We all feel the same way. Oh my God. Boy, did I feel good today? I felt like crap. Did I make some money? Yes. Did I end in the green? No. But I've been doing this for a while. Does it bother me for the day? Yes. Do I think it's just the end of everything? No. I'm excited. I am. I'm not kidding around. I'm excited. You always got to have some cash on the side. You got to move your positions around a little bit. And you got to expect the best to come out from the worst. And that is exactly what's going on. Because you scroll through the headlines on Bloomberg, on CNBC or Fox Financial Network, or wherever you look at, Yahoo Finance, Benzinga, StockTwits, everybody and the mother is like, oh my God, it's all over. Right? The reason I talk with confidence is because if I hadn't gone through so many of these type of 2-day type of massive down 800 plus points, look at that. Is this the first time? Back in August, not too long ago. It was what, 2 months ago? I keep on thinking it's November, by the way. I must be losing my head. It's October. It happened here. This is more similar to what's happening here. Then what happens after that? After the second or third day, you get like a 50, you get like a 6, 7, 800 point rally. Is it not possible that from this extreme, deep oversold condition, and please go through my Twitter feed today, because like I said in one of the posts, I'm working tireless to walk you guys to analyze, to understand, and act on whatever you want to act on, or just set aside. Use it as a learning experience. What's wrong with that? Are you going to be homeless because you lost $400? And on a bigger account, you're going to be homeless if you lost $4,000? If that's the way you think, then never, ever attempt to be a trader or an investor for that matter. So saying all that, yeah, on a technical basis, there's nothing to say. These are extreme conditions. And given past experience and past historical precedents, minus 192 on the daily on the McClellan oscillator. Holy shit. Oops, should I say that or no? Yeah, holy crap, okay? I mean, look at it. Most we got to was probably minus 200. back on the sell-off on June 3rd, when everyone think that's it, it's all over, the same crap, we got down to the same levels we were at back in March. Just showing it's not the first time. McClellan oscillator got to, these are the internal readings, your blood pressure, your heart rate, or your hemoglobin count, or whatever you call it, right? Is this what it's telling you? So either you're going to die, I hate saying that, as a trader, or you're going to bounce back. The fine line between completely dying as a trader and bouncing back is really fine. It's just at the point of maximum capitulation. And we certainly saw one of those today. Yeah, it might follow through a little bit more tomorrow morning. Okay? Is where the real money's made. The real money's made at the point that you think it's all over, the point that the market, the algos, the head, the forces of the market have a ferocious, had to happen 100% of the time, ferocious reflex rally. There you win, you make up a good amount of your losses, and you get out on technical levels where possibly the market will fall. Now, I'm not going to go through all that because I spent many hours today, exhausting hours, with some amazing levels on the charts that I posted on my Twitter feed. So I leave it to you all to figure out what those levels are and what you need to do. When the markets are down 600 points and we end down about 500, and we could easily go up 400 like in a blink of an eye. So for some of you who are newer, well, live and learn. These are the times where they separate the men from the boys. It's a very chauvinistic term, or whatever the case may be, that's just a saying, right? So if you think you're a man or a woman, then you got to separate yourself from being a child. It's tough. That's where the big money's made. All right. So all the charts on the Twitter feed, go through it. It's shown in visual terms very clearly, and we go from there. Now, one of the things we're going to reveal tonight is the McClellan oscillator, not just this one, but keep in mind, I'm not shying away from this. We are on a major technical breakdown. So tomorrow's number is very important. What happens next week? Comments coming out of President Trump. Starts to piss on the Chinese again. I don't care what your political affiliations are. The fact is, the fact is that somebody's asking me no webinar. I already put it out there. The fact is that I'm just looking at the market. That's all. I'm not here to overanalyze all the politics and stuff. That's not my business. I have my opinions. I'm a big supporter of a lot of things that President Trump is doing. I don't like some of the things that he does. But that's the way, I have a right to say that. I'm a New Yorker. And, I don't idolize anybody other than God. So that's just the way it is. And anything that hurts American business and American stock markets, I don't like. Period. And if somebody's going to hit the market and demolish the market, I don't like. That's it, because it hurts. It affects my living and my family. So I don't like. So let's see what happens. Now, where is that beautiful reveal? Can we have a drum roll? I should have a little sound effect actually on my things, to get people more awake and excited. We should have a drum roll. This was yesterday's. We were down 39 on the NYMO. Every single time and I've mentioned this many, many times before, every single time, forget 99, that's when you buy like hands down, get a third mortgage on your house. If you don't have a mortgage, just like rob your grandma's bank, where you need to buy the market like nobody's business. Why is the color changing? Perfect. Minus 66, buy with both hands down. Here we buy with both hands, legs, arms, like I don't know, whatever limbs you got left. Okay, these are all major buying points where the markets have just gone berserk on the upside for a short time. Remember, these are extremely volatile markets. There's a lot of factors at play, a lot of hedge funds going up and down, so many things happening. So let's do the reveal, which is update for tonight. This was Tuesday, 1st of October. Ready? Wow! Can we have a clap? Now I'm excited. And if some of you who have been with me, some of you who have seen humongous profits just go by because you sat there frigging scared like I don't even know. Okay? We're down minus 65 off the charts. And I talked about something on the Twitter feed, and please focus on that. And I know Dominic is, because he texts me, he DMs me during the day asking me terrific questions, as a new member, is when I say those Bollinger overshoots, forget what I say. I show what happens during a massive lower Bollinger overshoot. And we got a Bollinger frigging overshoot on the on the McClellan oscillator. Oh my Lord. I should just sell all my cars, my house, everything, and just put everything in the market. But my wife is not interested in the stock market, is she? Right? Just like most of your wives, or husbands if you're female trading. This is huge. We got down to minus 79 back in August. What happened on August 23rd? The market went bonkers after that. And this is your full stochastics. Bonkers. Hundreds and hundreds of points. We're at minus 65. We can slip and slide to even minus 78 for all you know. It's quite simple. You can literally hands down put money in the market over the next 48 hours. You can expect to get a double or triple your money back on options, in my opinion, based on everything that has happened on this NIMO. I just want to reveal it directly in front of you tonight because I hadn't updated it till this session. Minus 78 in August, minus 65 in May. Every single time you see a New York NIMO, the New York McClellan oscillator. This is a very specialized chart sent by a good friend of mine, a Canadian friend, from many, many years ago, back in the 2007, 2008 period, I still use. Now, this updates once in the evening. It's not updated intraday, which is good because it keeps me focused. Minus 65. Holy crap. Now, the MACD still hasn't turned, but do you want to buy it when the MACD is fully turned like it has, in which case it's going to jump 15, 16, 17, 18, 19, 20 points on the McClellan oscillator? Do you want to get in early, hold your nose, and know you're going to live? It's like cliff diving. Minus 65. That's all I got to say. Now, we don't know what tomorrow's ISM services numbers are going to be, because yesterday was ISM manufacturing number showing a decline in the overall economy. Now, one of the reasons behind that, which some of you might know or not know, was the delay and the production slowdown on the 737 MAXes. Remember, Boeing is a big component of our export economy. Another thing was all the strikes and everything and the slowdown in production in General Motors. Some of you might have read that. So those things did play a ground. Now remember one thing, a one-month report does not make a trend. So all those guys who are saying we're going to fall into a recession, it's all over for now, they're all bullshit. I think that was the term used by President Trump today in one of his press conferences, but I like to use it freely. It's bullshit. I'm not saying that the U.S. economy is not slowing down. I totally blame this whole U.S.-China trade war for the problems that the U.S. Economy is having. It's a fact. It's not the Fed. You can piss on them all you want. Okay? U.S. CEOs are scared. They are not spending money on building plants and creating jobs. And they're very worried, from FedEx to all the multinationals, about what is happening to the global economy. You want to kill the global economy in the name of U.S. nationalism, and I'm a pure economic nationalist, okay? Then that's fine. It's not going to do anything for anybody. It's going to hurt us and the global economy. And I don't think President Trump wants that. He knows that very well. President Trump is a global businessman. If any of you forgot, he knows how it works. And he's going to play the political card to keep a part of his constituency happy. But overall, I believe he knows that if you kill the global economy by putting tariffs on tariffs on tariffs, then it's going to kill the U.S. economy too. It's a fact. Because on our own, we don't survive. Because it's very simple. It's a simple formula. Because 90% or 70 to 80% of our income as a nation comes from selling overseas. So we keep on putting tariffs on tariffs and stuff overseas, then where is our income going to come from? Okay. It's good stuff here. That is the reveal. So futures are about 5.5. Who the hell cares? Because futures can change when the Europeans open, blah, blah, blah. All I know is everything that I see in front of me is just screaming blood red, and we are in for a substantial bounce. Now, one of the charts that I look at from a technical standpoint, and I wish, I do apologize because I wanted to do this session on my quad Algo HFT workstation number 2, but for some reason GoToWebinar didn't open there. I might have a quick session tomorrow to show you guys, because those are the ones that I do to use to do my quick scalps. They're 30, 40, 50% parts of the day. Beautiful. Okay. I see the movements on the candlesticks much better than I see on Think or Swim, and that's QUODD. And I like I mentioned that many people, some of you use it, some of you don't, but everybody who's serious about making money should do their free trial. It has nothing to do with me. I have no business affiliations with them. I've been using them for more than 12 years, and back from my Wall Street days. And you should, because you start to see the first green sprout developing or red sprout developing, and you can take evasive action immediately, make some decent money intraday, and also on the swing picture. So that's it. So we are at minus 325 on the 4-hour, which is the first cousin, the closest cousin to the daily. For a trader, the 4-hour charts are extremely important. Minus 326. Last time we were at minus 326 was August 5th, when the markets hit 2776. So let's ask you guys a question that you can answer yourself when you're listening to this. Is we are at the same frigging deep down panic, end of the world, DEFCON 5 level on the internals. Remember, the internals speak volumes beyond the charts. Yet we are at 2890 or thereabouts. Yeah, 2885 on the E-minis. Here we were down 90 points lower, 90 points lower at around 2800, but the internals went to the same level. That is what we call a very severe positive divergence, which will play itself out in a matter of days. And it's going to be fast. It's going to be furious. You have to be ready for it. You have to have bought some stuff today. I need to hold your nose, watch the charts or not watch the charts, and let the market rip. And the rip is coming. Whether the rip's going to fail or not, we don't know yet. We don't cut a deal with China, the rip's going to fail real fast. This is the way it works. Remember, the business of the algorithmic high-frequency trading programs is to take you away from your trade, to make you feel so crappy as if your whole life, like I told a friend of mine, won't name names, I said, you act like you're a homeless guy, like you put all your money into one trade and you're just like, oh my God, if that doesn't work, like you're done. You're back, you're on welfare. It's like, come on, guys. You're all adults, ladies and gentlemen. You gotta know how to manage your money by putting selective amounts in that. If you have a small account, you wanted to throw it into something full out, that's fine. You probably make a lot of money. But if you have a 5,000 account, 10,000 account, or 50,000 account, whatever the case may be, you want to put small portions in different things, and don't act like because one thing's down a lot or two things are down a lot because of the market, like you're going to be at the end of a United Nations, like, I don't say it lightly, food charity line in the middle of Congo. I mean, serious, no offense meant to anybody from Congo or the Ethiopian famine. I mean, don't act like that. Stop acting like a wuss. Like, oh my God, if this doesn't work, I'm like, what's going on? That's what gamblers in Vegas do. That's not what we do at Clueless Safe Trading. Okay? So seriously, think about that for a minute. Yeah, it might feel like that. Even Siri woke up on my other iPhone.
Sorry, I missed that. Could you say it again, please?
So Siri's asking me, could you say it again, please? I mean, what the hell's going on? Okay? So the bottom line is that was my second iPhone, which just spoke to me. So bottom line is these are serious stuff. You don't need to be a technical genius, You need to basically have grit, have obviously options trading is risk. And you have to look at the visual picture as to where the markets turn. Every point that I'm marking, is a pivotal low in the market, a pivotal low. That's all. That's really all. Now, what happens in the bigger picture? Well, President Trump might know or not know. The markets, even the daily charts are deep oversold. The weekly charts are, in my opinion, not looking good. So we're going to play the bounces because the weekly charts are starting to turn around. Does the market always know what President Trump is going to do? No. This is probably one of the few administrations that we have had in recent years where there is so much element of surprise, both positive and negative, because there are extremes. And the thing that I don't like, as I said in previous occasions, is that different parts of the Trump administration seem to talk with different parts of their mouth. They don't seem to have a coherent one-way policy statement regarding what's happening with China, regarding what's happening with tariffs, with other nations, blah, blah, blah. I know it's a convoluted poker game, it's a, all that stuff, but it is extremely unnerving to the stock markets and creates massive volatility in the markets. So the weekly charts are not good because they're starting to turn around. What I'm focusing on is the hourly charts, the daily charts. Individual stocks made a very nice amount of money on GameStop. It's still going to go higher. Re-entered it back after selling it around 25 cents, most of it, from about 10 cents, 6 cents, and some of them that I bought at 4 cents. Do the math. I'm sure you guys are good at math. That's a big amount of money. There's always going to be opportunities, guys. There's a lot of stuff happening underneath the surface of the market, but the U.S. economy is not breaking down. We are not going to go into a recession unless, I repeat, we go into a full-fledged far nastier than it is right now, trade war with China. I can guarantee you we're going to go into recession. China is going to tumble. They're a different type of economy. They're a very capitalist economy, but at the same time, there's a lot of stuff there. They can buffer their thing. They have enough people to create consumption, and I don't think any of us want that. Any quick questions, Dominic? I'm going to wrap up.
Not yet. No.
Okay. Other thing that I want to show you all is SPX 533 chart. This is getting quite oversold. However, it's telling me that it's possible we go a little bit lower. I have put out multiple precision technical stuff on these are all showing that we're going lower after the initial bump. Okay, but my Twitter feed today, all through the day, has shown multiple charts showing you what we can do. And one of the most important ones is the one that shows the Fibonacci retracement. Best case scenario at this point over the short term, and this is not the first time the markets have tumbled 800 points. It's one of the few times, by the way, is the best case scenario is your 50 fib. Ask Mr. Fibonacci back from the 1800s in Italy, one of the greatest mathematicians, why it works like that. Okay, just works like that. So I'm just a simple guy, I follow it. So basically, best case scenario is me move all the way up here. At this point, there's going to be selling. They're going to see whether they want to hold this uptrend line. That's why I draw these charts. Now keep in mind, yesterday and the day before, I said one thing clearly. Because if I make a mistake, which I did by not heavily shorting the market, because I didn't really foresee it coming, even though my charts are kind of signaling, I did say very clearly, and I'll leave tonight with this statement. I said very clearly, and I showed that clearly on my charts, that my individual members and traders feel free to short the market when it breaks certain technical levels. And I'm sure some of you did. And it was a lottery ticket. The markets don't give out lottery tickets too often, on the upside or the downside. So the ones who did it and got the lottery tickets on the big drop today, well, thank the Clueless Day Trading charts for it. On that note, I'll certainly answer any questions. We're in a very volatile period right now. You have to be selective. You have to understand the dynamics of these extreme oversold readings, which almost 100% of the time, I repeat, based on historical precedent, create a sizable bounce. However, we do have the big risk factor in front of us, which is what is tomorrow's number? I believe it's 8:30 a.m. I'm not quite sure. Is it 8:30 a.m. or 10 a.m.? Let me check it. Which is the ISM services number. And if that comes weaker, you can rest assured the market's going to tumble more. Okay? And then we have the Chinese delegation arriving next week, and we don't want to get into a food fight with them about everything that's going on. But they're not traveling a couple of, 4, 5, 6, 10,000 miles here to basically have a food fight with us, right? Or a nasty fight with us. They're coming here to talk, to negotiate, to see what happens. Tomorrow is Wednesday, Thursday. Tomorrow's PMI Services Index, wow, comes out. It's the Purchasing Managers Index comes out at ISM Manufacturing was the one that caused the fallout on Tuesday, and tomorrow's, and let me show it to you guys. Clean this out. This is what drives the markets. I'm just keeping it real simple. And by the way, you're looking at stocks like Amazon. I like Facebook a lot, not because of the company. I don't even have a Facebook account. Is just the way it's acting. Apple's going to bounce. Roku was positive today. There's a whole bunch of these different situations that are happening. The HMOs were pretty okay. So tomorrow is Thursday. Jobless claims, it's important, not that critical. Randall Qualls, which was nominated by President Trump one of the Fed governors, is going to speak at 8:30. The PMI Services Index, 9:45. That's 15 minutes after the market start. Factory orders, very important. ISM Non-Manufacturing Index. That's the one we're looking at 10 a.m. So this is the one ISM non-manufacturing, not the manufacturing, but the non-manufacturing. This is the one that every single bond guy and stock guy is watching. Anyone with what actually understands the market is watching. Okay, Jerome Powell speaks at 2 p.m. on Friday. He is, whatever President Trump pisses on him, whatever, is going to make sure that he cuts rate maybe 25 or 50 basis points on the next Fed meeting, which is in October. And he's going to do it. He's not going to let the U.S. economy sink. And I think he's a gentleman for not responding back to the constant bullying attack by Donald, which is one of the things I don't like about Donald. You don't keep on pissing on a real solid guy who's doing the right thing, like constantly. It's so childish. It's pathetic, if you ask me. That's just my opinion. Okay. So he speaks at 2 p.m. on Wednesday. This is a very critical number, the employment number, the jobs number, which is going to clearly show the U.S. economy is descending real fast. Whichever the case, the slower the U.S. economy gets, the bigger the rate cut we're going to get. But this is what we're looking for tomorrow. Have a great evening. God bless you all. And God bless the USA. And more importantly, God bless U.S. business, because that's what keeps us where we are. Good night.